The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi, everyone. This is Basil Chapman sitting in for Larry Pesavento. I usually have the show before Larry's, 11 o'clock till noon, every day, every market day, that is. And Larry's away, so I just found out, and I said, hey, I'll take this time and I'll get my thoughts together and just do the show because we like to fill in. We like to have shows going on all the time for you here at TFNN. That feels like that's our objective, education. No, Larry's always one to educate, and I hope I can do the same thing here. So let's just go right into the market. Dow's down 31 at 18,015 on this 18th day of February. 18th day of February. And S&P's down 4 at 2,096. The comp index is down just a little bit at down not even 1 at 48.98. Gold got smacked again today. It's down 10. Yesterday it took quite a dive. It's at 11.99. The silver's down 0.058 at 16.32. What's really interesting is that platinum, I just wanted to do a chart of platinum because I really hadn't looked at platinum for about a week, I think. Platinum has that pattern that I call the A or the Eiffel Tower pattern, the Chapman wave, straight up and straight down. Looks exactly like an uppercase A. Let me just type that in and show you exactly what I mean. This is what I'm talking about. Make it red because it's up and down, and make the font nice and big, and we go to 48 pica. There it is. That's your A right there. Straight up, straight down. I call it the Eiffel Tower pattern. And what happens is, if it passes 60%, around about 60%, oh, it's Larry's, so 0.618. If it passes 0.618, I usually use around about the 60%-ish area. There's a chance that it's going to give back almost all the gains. And in fact, this has gone from, platinum has gone from the low of the 22nd of December at 1177. It goes all the way. Just let me tell you briefly, in the Chapman wave, I should have that chart ready and I don't. In the Chapman wave, all you're looking for is 4 successively higher peaks. So it's like a sawtooth wave on the side, and it keeps making higher highs. And as soon as it passes one peak, it starts the leg of the next one. When it makes a peak, that becomes a peak, and you wait for the next leg to take over. And there's invariably 4. At 4, the peak D, A, B, C, D, that's where other things can happen. You look at the MACD, you look at the stochastic, and the MACD was still extremely strong. That's a good chance you're going to go higher in the alphabet, and it goes to an E, and it tops out, goes from that 1177 level all the way to 1290 on the 22nd of February. That is one of the quickest peak ABCDEs in that magnitude. That it's not often that it does it that quickly and that strongly. That's what I wanted to say. Then on the way down, it makes what I call, there's the plumb line, and this is very important because if you go from that side to the midpoint right there, and then you go to the right, new parallel, right there, you should have taken until the 23rd of February to retest that 1177 low. Here's your plumb line. Plumb line is the midpoint. Look at that, right there. But when you do it in an even quicker time frame, especially if you've gone not just trough A and then trough B, but you've gone trough A, B, C, and D, you've got to be really careful, because what it's saying is that if there is no bounce back above the previous left side low bar, that's at 1177, within the bar that takes out that low, closes below it, I should say, and the very next bar, you're going even lower. In this case, you being platinum. Now let's look at the long-term chart of platinum. Look at this. So this is Larry Pesavento's show. It's called Trade What You See. And I just wanted to show you peak F top in the monthly chart all the way back in March of 2008, around about the 2420 area, plunges down to the 200-period moving average right there at 867 on October of 2008, runs all the way in two buy modes to peak ABCD, and then ABCD goes all the way to 1958.70, and then comes all the way back to the 200-period moving average, spends 4 months trying to hold, and this month so far it's not holding. Not a good sign, because it's saying there's no support until you go all the way back to the 867. Nah, I can't even go that far. And let's just say that it's very negative. It needs to bounce, and the weekly says, boy, you better bounce really quickly. By Wednesday a week, you need to be back in the 1177 or high area. Let's go to Rob in Paramus, New Jersey. Rob, how are you?
Hey, Basil. How you doing?
Well, thank you.
Hey, I was wondering if you'd look at WYNN, W-Y-N-N. I bought a 155 call, and I was thinking of holding it for like 2 weeks.
ABCD pulls back.
That is March call.
D. Okay, so this is either E/B in the daily chart. WYNN trading at 157.88. Up 88 cents today. Good sign that it's up 88 cents. The weekly chart is in leg C, maybe peak C if it doesn't go above 160.41. And the monthly chart is just horrible in that it went from 248.31 straight down to 133.58. And this is, I have to call it only a retracement bounce at this particular point. Now, there was some news about MGM, which is acting really well. It's at 22.45. I'm trying to think. You've got WYNN, you've got MGM. What am I missing in the group?
I'm not sure.
All right. Well, I used to know.
Caesars? Is Caesars a big company?
Caesars. I don't remember the symbol for Caesars. Well, I thought I'd just look at a couple of them at the same time. In the meantime, what we've got here is a stock that's making a bowl formation rather than a cup formation. It's like a bowl, it's taking its time. It's making stair-step moves. Now, let me explain a stair-step move. Stair-step move basically says a big jump to the upside, and then a deliberate move to the downside. Nothing happens. Then, boom, another move to the upside, and usually it's slightly higher. In this case, it wasn't higher. It was under it that bounced in January the 13th. But then it pulled back, held the low bar very nicely, and then spiked higher. And that time it did go to the 157 area, pulls back to 144. It has quite severe pullbacks, but then it's run up again. So let me go ABC. I'm just going to type that in for now. So here we go, peak A. I haven't got this all set up so I can do it like a machine just yet, but I will. D pulls back, and that's either A. I wonder if that's a peak. 148.89. Okay, no, it's not. All right, so this is E/B. And at this particular point, I probably would favor B rather than E because the MACD is still good. The histogram's improving. That's the 0% line. The green line's above it. And the stochastics at 81%, and that's good. I'm a little disappointed that the on-balance volume is not climbing. And that's telling me I've got to be a little careful in my analysis here because the characteristic of the weekly chart so far, oh, that's leg C. All right. The characteristic of the weekly chart so far is to make this kind of H, lowercase h that goes to a lowercase m pattern, but it has gone substantially above the previous peak A. So I've got to think of it now as a very almost like I'm going to call it a reluctant up channel. There, I think that describes it very well. It's in a reluctant up channel. There it is. Okay. Now I've got a much clearer picture. So you've got which strike?
155 call.
Okay. So you're in the money right now. And you've got it. This is not February. This is March.
Yeah, March.
Okay, so you have time. I'm going to suggest that I'm not the person to tell you to do anything. I think that you've got into it very nicely. I think you have. Did you have an upside target just in the analysis that you do?
165 to 170.
Okay. See, I don't have that. My guess was that you were really looking close to the 165. I didn't realize you were even thinking maybe 170, because if it gets to 170, 173 is the 200-period exponential moving average. It looks to me like it's going to take us time to get there. So here's what I'm going to recommend. And this is something, you know what? I'm going to outlay for you what I'm looking at in terms of price movement, resistance points, and support levels.
More time, though. I was just thinking I'd try it for 2 weeks, and that's it.
But you're going to have to, you need to have price movement above, I'd say 161 to really start garnering some very good profits. And that's the issue that I wanted to discuss. If I'm looking at this in terms of just what does the price tell me, I'm joining very important levels. I'm joining the low bar from the 17th of December at 133.58 to the low bars of 138.11 and 138.84, slightly higher on the 20th and 21st of January. I'm then going to just go click, and I'm going to draw in a parallel line, and that parallel line says, gee, that's almost perfect. I could never even guess that a chart could make that kind of pattern. I mean, statistically, I just don't even know what the odds are to say that the price that Wynn Resorts, Inc., in the casino business, although they call it entertainment, I think, very politically correct, I would never be able to say, based on the move that it made back in December the 29th to 154.76, that this is going to hit the trend line that I just put in on the most important high bars on the left side, slightly rising. I would call it, where is my protractor? Oh, I don't have it here. It would be fun if I could do that. I'm only thinking it's like 13% or something like that. The incline is about 13%. I would never say that, you know what, this is going to drop and then it's going to move back up and it's going to hit that trend line exactly at 157.75 on the 27th of January, then pull back, and then come right back to exactly that same rising 13%, whatever it is, trend line at 160.41. But it's done that 1, 2, 3, 4 times, maybe even 5 times if we sort of count today. That is incredible. So I'm going to tell you what I'm looking at as soon as we get back from. Can you hold through the break?
Yeah, thank you.
Okay, because the 120-minute chart is also going to give me a lot of information. I'll be back with Robin Paramus, New Jersey. We're looking at Wynn. Basil Chapman sitting in for Larry Pesavento. We'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back with Rob in Paramus, New Jersey. Basil Chapman sitting in for Larry Pesavento in Trade What You See. And normally I have the show 11 o'clock till 12 Eastern Time. I just want to double check any questions. You're right there. Okay. Sorry, I just wanted to check that. Okay. Let's go back to Rob here. Sorry, Rob, I just wanted to check a few things because as guest host, I wanted to see if there were any questions pertaining to what Larry would be looking at. But in the meantime, we were looking at WIN, and you can see that this had a huge move in the weekly chart that went to 249.31, pulled back to 188.43, the same as the gold chart that went in the monthly chart, pulls back, makes the H, I typed it in, H to M pattern, then broke down below 188.43 and kept going lower. And now it started a move that says, I'm only trying for a bounce. I don't have the kind of strength that should take me back to the 180s. I have to first rebuild a base, and I think that's what it's doing. I'm only afraid that the base is going to look the same as the H pattern as it breaks down below 144.69 at some point, but it might not just be yet. So the trend line that I was looking at in the channel formation in the daily chart, the reason why I want to look at the weekly chart is that patterns repeat. I wanted to see what pattern there was that repeated, and it's the pattern that says if I make an H lowercase h, I can then make an M lowercase m, even if I go slightly higher on that right shoulder. It's what I break on the downside that you got to be careful of. So here's what I'm going to say to you. My eye tells me that it's 157.90. 160.41 was the high just a couple of days ago. The way I'm looking at it, I've got a feeling, based on the chart formation, that unless there's a direct power move right through 162.5, 163.5, that it's going to stall and it's going to be stuck here for just a little while longer. And what you want is, while we're still in this up move, remember, I'm still expecting the market somehow or other to move higher in the Dow, the S&P, and the QQQ series over the next week or so, maybe into early March, and then you got to be real careful. So I'm going to suggest to you that if 154, I don't know what your plan is, but if 154.47 is taken out to the downside, I would start to say, hey, I want to lighten up a little bit on those core positions. It's going to be really tough using the time period that you're looking at for it to do it. Now, it needs to do it by, today's Wednesday, I would say by Monday afternoon, probably at the latest Monday afternoon. Win needs to be trading nicely in the 160, 180 to 162.50 area. If it does that and it's holding, and the general market hasn't broken down, but it's still, the market's holding well, still struggling to make higher highs, modest higher highs. Then this 120-minute chart that I've just drawn up here, which made a peak F and then pulled back in a cup formation, has broken out in what I call a Chapman wave cup and ladle pattern, which usually goes to D. I'm looking at this and I'm saying, hey, 160.50 to 150.680 should be the trading range over the next 2 days. And you want to see it break to the upside. I think that's, for me, the simplest that I can make it. But I can understand.
There's probably better trades.
I think that there are better trades, because the pattern that you've chosen is a stair-step pattern. But you want to be in for the stair-step to the upside, so that the trade that you got into, you probably got in lower down enough to say, this is the stair-step. My biggest problem here is that sometimes it makes the move, tests it for a day or two, doesn't break the high, and then it comes back, and it comes back quite deeply, but only for a week and a quarter, and then it moves to the higher level. That's what I'm saying. Just be careful. The rhythm of the stock very often stays as the rhythm for quite a period of time.
Okay, I appreciate it very much.
Okay, so you really do want to see, I mean, today's up 85 cents. That's good action. I want to see it break the high of the 13th of Friday, I think it was, of 160.41. The moment it breaks it and starts to hold, that for you is going to be the test, because the stochastic, you use the stochastic, right?
Yeah, I get your newsletter. I use stochastic in MACD.
Okay, so stochastic.
Yeah, I was thinking, like, today, if it popped up, I was feeling comfortable. Otherwise, I'm not that comfortable.
Okay,
and I'm
all
up
right.
40% now.
I'm with you, but the stochastic at 81% is good. If it holds and then flattens out, that's good, because that'll go higher. You just don't want the 81% stochastic to go to 78. Hope that helps you.
Very much. Thanks very much.
Thanks for calling, Rob. Speak to you soon.
Goodbye.
So now the Dow is up and down 28. I'll be right back. Basil Chapman sitting for Larry Pizzamento. We'll talk about my webinar tomorrow night coming up.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento, and this is what I wanted to show you. In the den, there's been much discussion here about I missed that. Las Vegas Sands. Oh, thank you, Steve. Steve just mentioned, Steve Rose mentioned Las Vegas Sands. Yeah, that's acting quite a bit better. You see, it's broken nicely above. It's almost the same pattern, but it actually has broken a little bit better. It's closer to the 63 at 60.32. It's close to the 63 200-period exponential moving average, plus I believe that's the 32 period. 32 period exponential moving average in the weekly. Yes, so Rob, there are a couple of slightly better chart patterns, but the one that you have should work. I mean, that's really the issue. Okay, now let's go back. In the den, they were talking about gold, and I want to just say, look, GLD has given back huge chunk of the gains. And one of the reasons why I got so negative, we, in fact, in my opening call, we were long via not the GLD, but like the GLD. And we took a very small gain for it, and I just wasn't prepared to hold it. Why? Because the pattern of these arch formations, now I should have probably during the break got my CD introducing the Chapman methodology out. The arch formations that create the lowercase h that turns into an M, it's a formidable pattern. And if you don't recognize them and the way the stochastic and the MACD work, I did a couple of webinars that are still available at TFNN based on these patterns. And let me tell you, they are potent. Look at GLD trading at 115.18. Couldn't get to leg D. All it needed was a little pullback. It had that pullback. It went to a peak C a week of the 23rd of January, pulls back, has a slightly lower high, which makes the peak, holds them above the 9-period moving average, and then instead of spiking to a D and then saying, hey, the 200-period moving average, which I haven't been able to even touch since I broke down on the May of last year, May of 2013, I haven't been able to even touch it. I've got close, but I haven't been able to touch it. I've been repelled. And that says that this line of 114.50 becomes the major support level, because if it takes it out, it's going to retest the recent low of 109.67. I just, I don't see anything yet in gold. I think there will be a great rally coming up, but it's coming up much later. That's just my opinion. We've had pretty much the bounce that I thought would take many weeks, maybe months. We've gone all the way from the November the 7th low of 109.67. You went all the way to, that's a damn big move percentage-wise, to 125. And now look what's happened, pulls back. And that monthly chart is potent. It's just saying, hey, until I can get my stochastic and MACD in line to make a V-shaped recovery, or until I can get to 134, is it? No, 131 in the GLD, which shouldn't be a big deal if gold is going to spike because of the the Greek situation. I don't know. Then we're looking at a potential here of just going sideways with another H, and then my target has been somewhere in the 101 to 94, where the 200-period exponential moving average is. I don't know if it'll even get there, but my target has been at least a retest of the 102.28 low that was made February of 2010 to give you a left side, right side price time match. While we've gone extended past that level in time, I have to find another time price match. But at this particular point, I just don't see it. Maybe I'm wrong. I mean, things happen. But look at the dollar. The dollar is having a very nice rectangle formation. Look at that, just stuck in that rectangle. I suspect it will break down a little bit at some point. It'll go under 93.25. But at this particular point, it's just in this trading band. And therefore, the euro, EUR, USD is also in this trading band. Look at that. And I had spoken about crude oil before. The commodities are acting like everything's been commoditized, as if there's plenty of it. And that's what this H pattern in the crude oil weekly is saying. We'll see what happens here in the daily. So, okay, I just got that out of my system. Now let's go to GG, which was mentioned in the den. Gold core, I've got it as a peak E at around number 25 high. Why did I not think of buying puts for my subscribers there? Because the weeklies were still holding quite well at that particular point. Okay, look at that's. I love ASA. Nobody ever trades ASA. I've just watched it because I'm a former South African, and this is basically made up of South African golds. It's really like a little fund, and I believe they registered in Bermuda or something like that, or London. I don't remember. It's a peak F right at the 200-period moving average, right there. It couldn't break it at 12.31. Low is around number 12, and then plop goes down to 11.13 today. There's that A pattern. There's a letter A, and there's a pattern that says, be careful you don't form an A in the weekly chart and then the monthly chart. That's ASA, gold and precious metals. Give me a name, RGLD. This is a royalty company in gold, Royal Gold. There are. There's the H pattern that's just about to retest the most important low of 68.66. It's trading at 69.22, down 78 cents. There's the H pattern, and it says 67.75 is the 200-period moving average, which is probably where it wants to go, and that'll be the big test. And give me another one, gold, G-O-L-D. Look at that. The stochastic and MACD are just way down. Look, 7%. I've been talking today about stocks that have and indexes that are trading at 96% in the stochastic. Think of the exact opposite of 8%. As the other is strong, so this is weak. And the stochastic is still 81% in the weekly. That's why I kept saying weekly charts are not bad on the GLD and gold. But the dailies are the rudder. The dailies, if the dailies start to really take a turn, they're going to impact the weeklies. And look what happened with gold. Gold is Rand Gold. I used to live on the East Rand near Johannesburg as a teenager. Went to high school on East Rand. I used to go climbing on the mines. I actually went down a mile later on through the what are they called again? They have them everywhere. Oh, the rotary. Through the rotary, I went down a mine. Can you imagine? A mile and a half down, straight down in those days. And it's stifling. And you go down this, it's like a little elevator. They call it the lift. And they take it down, and you have to wear helmet and waterproof, the yellow waterproof things, because water keeps coming down to stop the powder from the dust from going everywhere. So they wet the walls, and you go all the way down, and then you go in this little train, little track, and you go underneath, and you see these huge cavernous holes. It's all dark, and the only thing holding up the roof of the cavern that you're in is just like a tree stump. So that if that's 4 foot, then you'd be bending 4 foot down. If it was 3 foot, you'd be crawling at 3 foot. It's just the admiration I have for those miners. I always think, Rhodes Memorial, everyone's so proud to get the Rhodes Scholarship, and, Bill Clinton got, and all these guys get the Rhodes. Rhodes ran the mines, the diamonds and the gold mines. People died, thousands died every year. It was horrible. It was slave labor, the Rhodes Memorial. All right, things change, that's the way it is. So here we are, 200 period exponential moving at 76.22 in gold, GOLD, Rand Gold Resources. I got off on that tangent because I saw the word Rand. So I lived on the East Rand, the mining reef from Johannesburg to little mining towns. Now they're actually big towns. I haven't been back for years. When I went to South Africa, ever since I've been here, I would, as much as possible, avoid Johannesburg. Always went to Cape Town, one of the most beautiful cities in the world. Okay, 76.22 is the support, and it's trying to bounce off there. If it starts trading if it just touches 75.70, then that 200 period moving average of 74.48 becomes a downside target in the daily from the 120-minute chart. So, I don't see much in gold. People have said that silver, they thought, the other day I thought silver was acting a little bit better. It was. It went all the way to the 200-period moving average, peak C1, C2. Then it came down, and now silver doesn't look too good at all. So, now, at any point, we might even find this afternoon, and now the market is weak. It's down 50. The S&P is down 6.5. Why? Because perhaps, let me read Chapman. No, I'm just trying to read on the Greek thing. So at 2 o'clock, you get the Fed minutes. That should be just a little something. But mostly, it is probably the Greek relief that they're looking for, or extensions, whatever it is they're going to try to put off. I mean, wouldn't you just try to put off, and eventually it gets forgiven? Could be student loans, right? All right, let's get back to our story. Right there, A, B, C, D, and E. Now, this is very interesting, and I mentioned it. I'm going to bring it up, and I'll probably bring it up tomorrow night just very briefly. The exponential rise, I'm looking at the silver chart, but that's got nothing to do with what I'm going to talk about. The exponential rise in education is not really the exponential rise in education. It is the exponential rise in the competition between institutions to one up on the gymnasium, on the courses being offered, on everything. You have to even wonder whether that has been filtered through, the expense has filtered through. If you had to measure the quality of education today for the cost, and you measure it 30 years ago, 50 years ago, 80 years ago, 100 years ago, I wonder if there's been an exponential rise in the intellectual capacity. No, let's even be fair. Let's just say, I wonder if there's been a rise in knowledge. There's no way we're going to ever be able to measure this. So there's just theoretical thinking in this period of excessivity. I'm just thinking, with so many deterrents, with so many distractions that young people have, how do they even, when you read that the usage of the internet, the number of hours spent per week besides all the other gadgets that we have, besides games and TV and everything else, you have to wonder, how do people get things done if you're involved in it? That's just a question I'm throwing out. So when you get to a point in history where quality, where pizzazz becomes more important than quality, that always is a disruptive period. And every turn of the century, I never even mentioned that for tomorrow night's thing. Gosh, there's so much to do in an hour. It's not even an hour. Oh, yeah. So let me write it down here. Turn of the century, new page. Turn of century. Turn of century. Will I remember to even look down and see that? Yeah. So it's turn of the century is going to be very important, because at every turn of the century, you've had a period going from, say, like romantic to contemporary, from Wagner or Brahms to Bartok and Stravinsky and Picasso. And then there's this disruptive period before you get into another period during the whole century that it takes up of different art forms that stay for most of the century. And then you get this disruption again. And we're in the period of disruption. Have a look at this. In the Boston Globe, I can't show it to you, I'm going to read it. Today's Boston Globe, on the op-ed section, opinion page, Wednesday, February the 18th, opinion A11. There's an article by Dante Ramos. And it has a heading, Vast Shopping Plaza or Boston's Next Big Thing. Imagine if South Bay Center, where the heck is, I think I'm picturing it right here. South Bay Center emerges as Boston's next hotspot, with its 2 rows of big box style retail on either side of a ginormous parking lot. Editors these days are using very interesting words, huh? Ginormous, I think Pat and Dennis, Cape Cod, should be appreciating that. Ginormous parking lot. The 2-decade-old Dorchester shopping complex is no one's idea of traditional city development, but it bustles, even on a frigid February day, as shoppers from dense Boston neighborhoods neighborhoods seek out the same low prices and broad selection that major chains offer suburban consumers. Strikingly, we've got a caller. I got to go to the caller, but it's about using 13 acres or more as for retail. Another 10 acres expanding, 500 units of housing. Wow, Boston is going crazy. Let's go to Jim in Littleton, Colorado. Jim, how are you?
Okay, Basil, how are you?
Okay. You'd like to look at?
I had a question about GLD you were talking about. A few weeks ago, you were just so sure that it was going to go to leg D.
Yeah,
and
wait, was that the daily or the weekly?
I don't remember.
Yeah, I think we're talking about the weekly, when it was up at near 125.58 and the MACD was climbing and the stochastic was holding.
Yeah.
Yes, let's come back and we'll discuss that in a moment. And it actually went to a B- in the daily. Hey, good question, Jim. I'll be right back with Jim straight after this break. Basil Chapman sitting in for Larry.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, don't forget to stay tuned for Daryl, and we are on right now with Jim. We're looking at the GLD, and Jim points out that a couple of weeks ago I was looking at this, and I said that there should be a leg D, and I'm pretty sure that I was looking at the weekly chart, because the weekly chart saw the stochastic running very strongly. The MACD, the moving average convergence divergence, was moving up well. But if you look at this line, this vertical line that I've drawn in there, I wonder if I'm going to be able to, I'm going to make it a little thicker right there. That line, let's actually put it the next bar so you can actually see where I'm looking. Up until that point, everything was working well. So, Jim, all I can say is that I had my my subscribers in the equivalent of the GLD, but I had a very tight stop. And the stop was so that we made a little tiny bit of money rather than take a loss. And my reasoning was that if there was going to be a pullback, the entry point that we got in, which was very good, should hold. And if it was taken out, then I had to be looking real closely at the stochastic of the daily chart, regardless of what the letter is. And that's the best that I could do, is to be able to say, those are my levels, that's my stop. If it takes that out, regardless of what I'm thinking, the visuals say that the MACD and stochastic have broken down, and that's what's happened in the daily chart. And there's an alternate count of G/B. That's what it is right there, a right arm extension. And that right arm extension has exactly the characteristic of the stochastic failing like this, just going up, not holding, instead of flattening out in the 85 to 90% area. Instead, it breaks down under 80%. My rule of thumb with the stochastic is that 80% level is very important. So, am I explaining a little bit
Yes,
of?
yes.
Okay.
That's good.
The most important thing is to remember that we are not the stock. All we do is the very best we can with all the technical tools available to be able to trade the stock. And it's amazing that even if you look at the weekly chart, that week of the 30th of January, the close was much closer to the highs than the lows. It was a very nice candle. So the opening salvo that Monday, as the gold pulled back, was the sign to say, hey, got to be careful now. Still okay. I remember saying, hey, it's above the 9-period moving average, and the MACD is still good, but the price is the price. Price is the arbiter of a trend. In this case, it broke down.
Well, I guess I was comparing it against to where you were so strongly for leg D in the Dow, and then it was breaking down pretty bad in January, but you still thought that it was going to hit a leg D, so that was my question. So it's stochastics basically then.
Yes, actually, that's a very good question. So, wow, I don't know if I can do it. You know what? I will talk about that. I don't know if you ever listened to my show 11 to 12.
Yep.
Tomorrow, if you listen tomorrow, I'll do the same thing. I'm going to write it down to talk about that. What's the difference that I made between the Dow and the gold chart that we just discussed? How come that I still look for D, and I am still looking for D? What's the difference?
Right.
It's a little complex to just quickly do it. I'd like to spend some time, and actually, it's a very good question. But I'm still looking for D in the weekly chart. And remember, we did get the C in the S&P, even though it looked like it was impossible. We ended up getting it. I don't know what it is about the Chapman wave, but that's the methodology. We look for the Ds. So I hope that helps you a little bit.
It does. Yep. Thank you. I'll listen tomorrow.
Thank you very much for calling. Thanks for bringing it up. I had forgotten that I was still looking for the D in the GLD, but thank you for bringing it up. So,
okay,
folks, just Daryl, I believe, is out today. We'll probably be doing some kind of replay. Then, of course, you got Dave White, fabulous show with Dave. Really interested to see what he's looking at because I bet a lot of his technicals are starting to get what I'm seeing at kind of the stretch side. I'm looking for a little bit higher prices, maybe to the first week of February, first week of March, but it's going to be an interesting show. So don't forget my webinar. I'll show it just as we go to the break right here. Whoops, there it is, right there. Front page of TFNN, free webinar tomorrow night. And I'll be back tomorrow. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.